Hi everybody. It is Wednesday, the 12th of November 2025, here with Cass Smith and Mary Jane from Freedom Financial Solutions. This is being recorded, so if you prefer to keep your face off, no worries. We'll be uploading it to our YouTube channel later because we know a lot of people like to find out what questions are being asked and what questions are being answered. How does this work, Cass?
Yeah, basically you ask questions. If nobody asks questions, we log off and go to lunch. But no, we just have a general chat about anything that anyone wants to talk about, any questions you have on all sorts of financial matters, tax matters, super matters, property matters, etc. If we can't answer, we can't answer. If we can, we will. And yeah, it's not financial planning advice. We should do that disclaimer at everyone. Every session we do. I am no longer a financial planner. I was for 20 years until I saw the light, and I've just noticed that Tony has the same background as me. No, we're not in the same house at different ends of it.
That's similar.
But yeah, no, I'm not a financial planner anymore. I am just an accountant, a mortgage broker, a real estate agent, a property advisor, a superannuation specialist, a asset and estate planning specialist, a justice of peace, and I don't know, probably a few other things I've forgotten. 30 years experience in all things financial. So basically you just put up your hand, electronic hand if you can, and then we take turns with questions. And you can also just put something in the chat if you can't work out how to raise your hand and unmute yourselves. Mary Jane will have you muted if there's any background noise, and then you unmute yourself when you've got a question. So who would like to start?
Yeah, so it's just a free-form question. Anybody got a question? There is a little virtual, like a little icon that says raise somewhere on your screen. You can raise your hand, or no one's talking, so you can just start talking or put your question in the chat. While people are thinking about what they want to ask, because we do know that a lot of people just jump on to listen to what other people are going to ask, and that's a way of educating yourself, and it's a great way, actually. A lot of our clients feel a bit nervous at the beginning when they set up self-managed super funds or trusts and other asset protection mechanisms because they don't know. But as they join these sessions or read some of the things that we've written, you get a little bit more information, and then after a year or so, or even less, you sort of surprise yourself and think, oh, I know what they're talking about. So if no one's got any questions, Cass, what's new and interesting for you at the moment?
Well, I guess probably people that are following us are aware that we went to Fiji and had a great time eating way too much for a whole week. Learning very, very advanced asset protection structures. I have been involved in trusts and estate planning for, I think, 30 years from when I first learnt it in university and raced home to tell my mum that we needed to redraft Nan's will before she passed. And it's been a fascinating area for me since. It's a bit morbid, being fascinated by death, but it's actually more about being fascinated about planning for the next generations and making sure that the next generations aren't adversely affected by your lack of planning, because there are so many things that you can do to plan for that next generation in terms of your assets and your estate plan. And we now have some seriously fantastic top-of-the-range products that we can introduce. So they've been developed by Grant Abbott, who I believe would have to be the leading specialist in Australia as a lawyer in estate planning. And then I would consider myself a very experienced, advanced tax accountant on estate planning. So put the two of our heads together and we can come up with some fantastic strategies.
Yeah, and self-managed super fund is actually one of those core strategies within the broader strategy. So it's one of the strongest asset protection mechanisms, and tax advantages are fantastic. So now, Tony,
just before we talk to Tony, so I say it as a bit of a joke, but it's not really a joke, but it sort of is funny that I'm so intrigued by these things. But there's been three things in my life that I have always been absolutely fascinated in, and not just fascinated in, but just think they're fantastic. And the first one ever was the testamentary trust concept, which is when you die, everything passes to a testamentary trust, which can be looked at. Then your assets can stay in that at a very, very good tax rate and it can go for generations. So that was the first thing that excited me. Then it was SMSF. SMSF I've been involved in since 1999, so yeah, over 25 years, and I just thought it was the best thing since sliced bread. I got my young kids when they were 3 and 4 years old into SMSF, and they did very, very, very well. Then in Fiji came these advanced asset protection trusts, which we call living trusts. So basically it's the testamentary trust, but you can do it while you're still alive. And I've certainly, anything that I'm ever talking about, I make sure I know how to do it, and I'm doing it for myself, because I don't ever believe in selling something that I'm not doing. I've actually had all of my assets in a trust, a living trust, well before I even met Grant and came up with these concepts. So I've planned it for myself, and then now Grant has perfected the model and it's ready to roll out for everyone. So, okay, Tony.
You have to unmute yourself.
Ooh.
There will be a button somewhere. You got the fan on. Is it hot up there? Is it?
No, that's the wind.
Oh.
We've had some big storms coming through.
Oh. Sorry, Tony. I'm sure there'll be an unmute button there somewhere. I can't do it for you. I did mute you earlier because often there's background noise or feedback, that sort of thing. Oh, sorry, Tony. And if you absolutely can't find the unmute button, then you can type your question in the chat. Or interpretive dance, I find, is always interesting for everybody else who's watching.
Yeah, just what Tony finds that. So yeah.
There we go. I found it. Hey, how are you?
Good. How are you? Good.
Thank you for that. This is my first time on your call, so I've been watching your emails and having a bit of a read up about it. I've got self-managed super fund set up. I've got company and businesses and whatnot. So what I'm wondering is, how does your service work, or how do I access your service, or is there a way for somebody to have a look at my position, give me some pointers, or how do we work together? Like, I'm not quite sure how the whole thing sort of plays out with you guys.
Yeah, no, for sure. So we sort of do run in separate companies and separate divisions. So your self-managed super fund, you went through us to do that?
No, I've done it. I had it personally done myself.
Okay. All right. So we do have a self-managed super fund accounting division that if you wanted to bring your SMS over to us, we can absolutely do that, which is just looking after all the accounting and the financial statements, etc., things like that. We also have a division that does just all general tax work, companies, trusts, and individuals. So if you wanted to bring that over to us, we can do that. We do find it is worth having your SMSF with the same accountant as everything else, because there is interactions between the two. Then the estate planning is done specifically with me, and there's probably two ways of getting started on that. And one is to book a 15-minute consult with me, and you can just do that on our website. I'm sure Mary Jane will put the link in to our website. You can book a 15-minute consult with me. That doesn't sound like long, but generally 15 minutes is enough for me to get an understanding of your situation.
Yeah.
And then we can go from there. Where it generally leads to, for if it's asset protection and estate planning advice, is that I offer a service for $550. I will put together a strategy paper where I basically just check off all the things in your financial life and what I think I recommend in terms of how to protect those assets. And it can be normally it's for everyone. It's have a will with testamentary trust. Consider an SMSF will instead of a binding death nomination. If you've got companies and trusts, you might need to upgrade the companies and trusts, their deeds, if they're a bit out of date. And then the big one is this protector trust, which is where we look at transferring all your assets into a living trust while you're alive, so that it's protected from every unforeseen circumstance whilst you're alive, but then more importantly, fantastic protection for the next generation after you pass. So for $550, I do a strategy paper where I look at all of those areas and tell you what I would recommend. And then if you proceed, that $550 comes off the cost of the services anyway. But in that $550 strategy paper, I do a full quote for everything that I think you might need to consider.
Okay. Do you
So
also do it? Oh, sorry. Yeah.
I was going to say in the chat that you might not be looking at just now yet, I've put emails on who you should email to follow up with, a link of where you can book in the consults, the names that you might want to know, and also a link to our YouTube channel under estate planning, where there's 2 videos Cass has done recently, which you might want to watch in advance, and where she sets out the sort of asset protection strategies that she's talking about. And then, yeah. Sorry, go on.
Okay. Do you do anything in regard to, I've got a bit of a concern where this government's going with digital currency and all the stuff that they're out there playing games with.
Yeah.
Do you have a bit of an overall view around how do I get my money out of the government system and I put it in other areas where, I'm out of this government game? It's sort of one of the things I want to look at. Is that something that you delve into?
Yeah, well, firstly, the protective trust, the idea of that is exactly that. You'll see on the videos, if you watch them, that I have a very, very strong belief that the government are going to introduce a death tax. So when we were in Fiji, was when they announced the changes to the Division 296, which is the unrealised capital gains tax. They were planning on taxing people on unrealised gains, which would be the first for Australia. And it's just ridiculous. You can't tax people on something that hasn't even happened yet, because how are people going to pay that tax other than to sell the asset to pay the tax? It made no sense. And I wasn't worried about it when they were 3 years negotiating, because I'm just like, it's not going to work. They can't get it through. And they didn't. But when they announced the changes, we were all in Fiji, and we were with 50 or so high-level accountants and lawyers in asset protection. And we all just looked at each other when the announcement came through on our computers, and we all went, oh, my God, look at this. And then we all went, yeah, this stinks. Because they were saying it like, yes, aren't we wonderful? We're not going to do that. But, now we've got a big hole in our budget, and, we might have to think of some other taxes. And they were promoting it as a 40% tax. So if you go over 10 million in assets, 40% tax, 40%, 40%, 40%. They kept throwing that figure around, which a lot of other countries have a 40% death tax. So we were all automatically going, they've got plans. And we used to have a death tax in Australia. So it's certainly not unforeseeable that potentially it'll be when the next crisis hits. And, well, we all know that there's financial crisis coming. And when that hits, then it might be, oh, well, we need all these extra taxes to repair Australia and make Australia great again. And so therefore there's a 40% death tax. So the idea of these protective trusts is moving everything out of your name into trust structure so that when you pass, nothing happens, because the assets just stay in the trust and keep passing to the next generations. And you need to do that before this 40% gets announced, because they will announce it with some sort of, from this day on. And what they'll do, and what they've done in other countries, is they'll announce a death tax and a gift tax at the same time, because otherwise everyone will just gift their assets away rather than cop the tax. So they'll have to do the gift tax. So then everything that I'm trying to do with these trust structures won't work after that announcement. So that's one way, Tony. And then all the other ways are basically, well, the SMSF, we believe, helps with that. Sorry, someone's whippersnippering outside. The SMSF helps with that, because if you get your money, the SMSF is still in government control, because you still have to do tax returns and financial statements. But if you have your money in physical gold and silver, particularly if you've got it stored at home, it is out of government control, in my opinion. Yes, you've got to still report on it. But if the whole system hits the skids and the whole country collapses and whatever, you've still got that gold and silver in your backyard. So that's another way. Other ways, we are always, me in particular, I don't stop much. My mind doesn't stop much. I am always looking for new ways that people can get out of the system. So many things out there these days. A lot of them are scams, but everything new that comes up, I look into. And if people send me links, I look into it. And, then what I normally do, I'll look into it and then I'll try it myself. And then if I think, this is okay, then we always get it out to clients. And, So
Okay. I don't want to hog the floor. One final thing. What about getting your day-to-day money out of the banking system? My day-to-day operating money, you know, that I spend and use every day of the week. Is there a way to get your money out of the banking system?
at this stage, no. I mean, we're all promoting use cash. Just use
Oh,
cash
yeah, I still do.
everywhere you go, and all of us should do that so that, you know, they can't ban cash. But I posted on Facebook this morning, the UK have just banned cash totally.
Mm. Wow.
So no, as yet, I was looking at a blockchain system this morning, but I'm not quite sure about that. There are certainly people out there developing things to help us get off the systems, but unfortunately, everything they're developing is still on the internet. So I don't know. Other than just going back to the old days of cash and trading in gold and silver and swapping your veggies with other local growers, I mean, hopefully that's where we're going to get back to at some stage.
Yeah,
Okay.
and on that note, I would encourage everyone to watch our Cass's presentation tonight at 7:30, I think it is. It links on our website, and it's called Investing Need to Know. But part of that will be talking about how to spot a scam in sort of broad brush, and then in a couple of weeks we'll do one more detailed on scams because, as Cass mentioned, there are a lot of alternate systems that sound good, but just because someone says it's a freedom thing, it doesn't necessarily mean it actually is going to be real.
Yeah, I got caught in one myself. It was called the People's Reserve. It looked good. I put $10,000 into it. Now I can't get that money out. The people that promoted it all don't answer any of their emails or anything. But I checked into that. It looked really good. It all looked fine, but no, yet another scam. So it's just non-stop out there with the constant scams. So
yeah. Now, in the chat, there's been quite a few emails, questions. So we'll do those before we get to Rob, if that's okay. Kat, what is the annual cost of an SMS tax lodgement, financials and audit, etc.? So I'll just go through it really quickly. Our accounting team, led by Peter, who's the managing director, they have a sliding scale of the annual accounting administration, and that starts at 1,620 plus GST with an upper cap of 3,120 plus GST. And in between that, it's based on 1% of the value of your fund plus GST, which is an industry standard. Typically, Big Super will charge you 1 to 1.5%. The good news is that they don't have an upper cap, whereas we do. So if you've got more than combined balance of $340,000 in your SMSF, that 1% ratio is going to start dropping down. So it's actually going to become cheaper to run an SMSF. So that's the accounting fee. In our company, we divide it by 12, charge it monthly, and that means our accountants are on hand. So, and we've got a shelter over our roof on hand to answer questions throughout the year and do the accounting throughout the year. There is the audit fee. That is 500, I think it's 500 plus GST, I think, or 550. I'm not sure about the GST on that. They've just sorry, I've just got notified that that's the fee. That is the auditor fee. They're independent auditors. We collect that on behalf of the auditors, pass it straight through, because we didn't used to do that and the auditors weren't getting paid, and you don't want unhappy auditors. So that's the two. The third thing, so when are they payable? As I said, monthly for our accounting fee. The audit fee will be due sometime between, say, August and February every year, because it's a big pipeline. It'll be an annual fee. Once it's lodged, the ATO, bless their cotton socks, will charge $259 for the pleasure, because heaven forbid they use our taxes to do what they need to do. And that will be tied in with your tax lodgement return. And then the final fee, just to bear in mind, is the annual company trustee renewal. This year it's $67. We expect it will go up to $69 from the 1st of July 2026. And they're the 4 fees you have to pay. There is an optional fee, which is if you want us to be your ASIC agent. All of those fees are on page 2 of our order form on our website, and I'll put the link in the thing below if you want to be reminded of what they are. Now, that was linked. Yep.
Sorry, have you finished that? I was just going to do a quick, say one sentence on that. Sorry, did you finish that? Yep, cool.
Yes.
Yeah, I was going to say, just to keep that in perspective, what I've always said about SMSFs is that if you have about over 200,000, definitely over 250,000, an SMSF is actually cheaper. So despite all those fees, it sounded like, oh my God, this fee and that fee and this fee and that fee. The industry and industry funds out there are the cheapest, and then the other ones are even worse. But even the industry funds, AusSuper, Care Super, Rest, Host, CBUS, all charge at least 1%, if not 2 to 3%. So if you have 250,000, and let's just say you're in a really good fund and they're only charging 1%, that's 2,500 per annum. So an SMSF is equivalent. So just put that in perspective. So if you've got more than 250,000, an SMSF becomes cheaper. And then because an SMSF can have 2 people, mum and dad, it can actually have 6 people. We've got SMSFs that have got, say, 4 people. You know, you can have, as that balance grows and grows and grows and grows, the fee becomes less and less and less percentage-wise.
Yeah, so the more you've got in it, the better. Basically, combined balance. And now that was linked to a question further down, which was, are companies by Kat, are companies needed to be linked to an SMSF or a family protection trust, I think. My friend said that they had an SMSF set up with a corporate trustee and a bare trust with a second corporate trustee. Is this the normal setup? If not, what would you recommend? So, and I mentioned the asset, the company renewal fee. So yes, we recommend a corporate trustee. There are 2 types of trustees you can have: individual, which you must have at all times 2 individuals to be a personal trustee, or a corporate trustee. We recommend corporate trustee for a number of reasons, and I will put a link in the chat in a minute, which will you can read at your leisure what the benefits are. It's more flexible, and over time it's more cost effective. So with a family protection trust, Cass, you're recommending the corporate trustee?
Yeah, but what I was going to say is I know there are people out there that absolutely do not want an SMSF, do not want a company because they don't want the director's ID, and that's fine. If you we do recommend it because administratively it makes life a lot easier, but if you really don't want it, you don't have to have it. There are ways around it. So same with the living trust. It's better with the company trustee, but you don't have to have the company trustee.
And on that note, I think there was a lot of confusion in late 2023 when there was a lot of hype about the director's ID, and there was some, like George Christensen, former politician, former federal politician, actually mistakenly kept calling the director's ID the digital ID. They're separate things. They're different things. You do not need a digital ID to get a director's identification number. A director's identification number is just a number like your ABN, if you've got one, or your tax file number, or your Medicare number, or your driver's license. It, in and of itself, sure, it's one of the jigsaw puzzle pieces, but it's not the big baddie. The digital ID is different. And again, on page 2 of the order form on our website, and I'll put that link in there soon, you can read how to get it without getting a digital ID. Cass, can you read the next? What is the link between SMSF and the Family Protection Trust? How does tax work between them?
Yeah, none really. They're just 2 separate pillars. If you sort of imagine your life and your protection structures for around your money, the SMSF is one pillar. The protective trust will be another pillar. If you run businesses, the companies and trusts you run businesses in will be another pillar again. And the whole point is what we're trying to do is have those pillars all together surrounding you so that you're in the middle protected from taxes. Okay, is there any more in the chat there?
Yep, there is. There is, if an SMS, oh, hang on, sorry, further up there, it was, do the 30,000 concessional contributions still apply in an SMSF? Yes, there is, and there's a 5-year catch-up rule. So over the last 5 years, it's $137,500 you can make as concessional contributions to your SMSF. And what that means is if your employer or you haven't put in up to that amount in concessional contributions, you can catch it up. If you've got any spare cash lying around, come and you've got an SMSF with us, come and talk to us and we'll do the exact calculation.
Yeah, the next question, I'll answer that. Sally, once we turn 60, can we withdraw bullion from our SMSF without actually selling it? So it's turning 60 and technically retiring from the workforce. Doesn't mean you have to stay retired forever. You can actually just retire. I retired 12 months ago, didn't last long. Now I'm back. So it's 60 and retired, even for a couple of weeks. Then you can withdraw it from your SMSF without actually selling it. We can do the accounting journals just to remove the bullion out. But why are you doing that? In an SMSF, after age 60, all the capital gains on that bullion will be entirely tax-free. So why would you want to take it out and put it in your own name, and then all the gains will then be taxable from then on in? So an SMSF is designed, so I've been involved in SMSF since 1999, and before all the new clients that we've got through the freedom movement, I just had traditional wealthy clients just wanting to put all their money into super because it was tax-free. And what they found, the simplicity in life, once they got to 60, 65, 70, 75, 80, and all of the wealth was just in an SMSF, all tax-free. They didn't even have to do personal tax returns anymore, and they just drew a pension out every year. And they came to see me once a year, look at the financial reports. Oh, yeah, that's all doing well, and keep drawing their pensions. So just because you turn 60 doesn't mean you all of a sudden wrap up your SMSF. But yes.
Sorry, Cass, that's exactly when you start going, goody, 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 goody. Now, Rob is actually next. He had his hand up before this.
I was only yesterday said to Mary Jane, I wish I was 60. And then, but just finishing on, and Sally, there's another second question there. Any recommended private safes? Yeah, absolutely. So in Brisbane, there is the Reserve Vault in Brisbane, Melbourne. So Ainsley Bullion, our preferred supplier, they have a recommended vault in Brisbane and in Melbourne. There would be ones in other states as well. It's just a matter of going to visit them and doing a really good recce. Is that so it's called?
Yep.
Recce. Go and check it, see the security, have a look around. Do you think it's easy for someone to break in? I love the one in Brisbane. It is you can't even get to it by the elevator, because there's no, like, the elevator just goes from ground floor 1 upwards, but then they're on the subground 2, and there's not even a button to get to it. They have to come up and get you. Then they take you down, and identification. You can't get past any of the massive big doors that are that thick. I saw the size of it the other day when I went through, without biometric fingerprints and from the staff, and then you can't get into the boxes without. It's just, very, very, very safe. Some of the other ones not so much. Some of the other ones have just got a glass shop front window that you just think the truck could drive straight through here. So go and do a recce and see what you think as to whether it's safe or not. But yeah.
You're talking about private vaults. I'm just wondering whether the question may have been about a safe that you buy to take home.
Yeah.
And that is, I don't have a recommended one. Do you have a recommended one?
Just the more expensive ones. So, don't go and get a $200 one from Bunnings. Bunnings do have like $1,000 ones that are actually quite good. The Guard All safes. It's got to be just a really good quality one that can't be got through. But I have heard that, like, a good burglar can get through any safe. So it's not just about having a good safe, it's having it properly installed, which is drilled to the floor so no one can pick it up and run away with it, in a very well hidden location, so they're not going to find it. Because most burglaries really are just a hit and run. They come through and you don't tell anyone you've got gold. You don't tell anyone. So no burglar is going to come in through going, oh, I know they've got gold here somewhere, and if you've got it really well hidden, they probably won't find it. When I used to store my gold at home, I don't anymore, I had several safes. So I had a safe that wasn't too well hidden, that had some fake gold, fake jewelry, and a couple of $1,000s worth of cash, and some silver because it's big and heavy. With the view that, if a robber found it, the worst case scenario, a robber puts a gun to your kid's head, open the safe, and they'll grab a couple of $1,000s and those blocks of silver and the gold, thinking the fake gold, thinking they've scored everything, and they'll run. So anyway, all right, Rob.
G'day, guys. Yeah, thank you. Learning a lot. It's awesome. This is my second Q&A. Yes, so I'm just interested on a couple of things. What's the history of trust? I mean, are they created as one and one only? Can new types of trust be created?
Yeah, so I think I'll do a bit of research on that so I can answer that properly, because a few people have asked me lately. But I did write my master's thesis paper on trusts back 20 years ago, and I'm going to try and contact the uni and get a hold of that paper, because that paper that I wrote 20 years ago covered the history of trusts and the fact that they've been around for thousands of years. They've been around. They were the original entity before companies were even invented. We had trusts. So the wealthy landowners in the history of wealthy families and slaves and all of that, they would hold their properties in trusts. So my thesis paper 20 years ago said the tax department, as much as they'd like to crack down on trusts or ban them or get rid of them, they simply can't. They've been a foundation of our law since the law began. What a trust is, it's an interesting concept. It is, I should have some money on me. I've got some gold. What trust is that somebody's got something, normally gold or an asset or money, and they hand it to someone else. Let's say I give this to Mary Jane, and I say, Mary Jane, can you mind this? Can you hold this for me for my kids? That's a trust. So Mary Jane is now the trustee, and my kids are the beneficiaries. And I'm the settlor, because I'm the one that has handed the money to Mary Jane to say, hold this for me. That's what a trust is. And the paperwork around a trust that we set up is basically just formulating that in official documents. You don't actually need the history of trust is you actually don't need those documents. The fact that I've handed Mary Jane the coin, that's the trust. But the paperwork we do just puts it all a little bit more officially in big fancy documents, where the trust documents basically are me saying to Mary Jane, you're the trustee, Mary Jane, and this is what I want you to do with this money for my kids. And that is what a trust is. And then there's just different types of ones, like a unit trust can have different unit entitlements for the beneficiaries. Discretionary trust means there's no split between the beneficiaries. It's at the trustee's discretion. Yeah, lots of different types of trust like that.
I've heard Grant talk about this a lot, and he always refers to the knights going off to the war in the sort of, I don't know, 12th, 13th, 14th, 15th centuries, and they would, as Cass said, entrust a friend to look after their property on their behalf while they were gone. So, great, Cass, and I've been encouraging Cass, we've got to publish your thing. So we'll have your thesis, which will probably be a little bit academic, and we'll have the dummies guide at the beginning.
And just to add to that thesis, and I'm going to write myself a note before I forget. I'm going to contact the university. This is where I left the tax department 20 years ago, and this was part of it, because when I published this paper and another one on GST, the tax office forbade me from publishing. The university wanted to publish it. They thought it was so good they wanted to publish it. And I got told in no uncertain terms that if I published it, I would be sacked and lose all my benefits.
So, any other question, Rob?
Yes, so they derive their validity or basis in law from common law?
Equity law.
Right, okay.
And I think common law would probably have a lot to do with it as well. Because so the tax department coming in and putting tax laws on trusts doesn't change the whole nature of trusts themselves. They are a separate beast altogether.
Yes. And an interesting one that's obviously been in the news of late, our old Labor Prime Minister Whitlam and what happened in the early 70s. And I'm sure you have a level of awareness how governments have been operating invalid and believe they're no longer attached to the Crown.
Yeah.
I mean, that's a whole can of worms in itself. Yeah. So, because the ultimate ownership of any land or property goes back to Crown.
Yeah.
So where and how can that be secured, or can't it?
It can't. And this was when I have been quite vocal about, there's been other people in the freedom movement that aren't necessarily qualified in anything, but telling people to put their money and their assets into trust, their own home and everything like that, saying that it would protect against this. And I was very vocal saying that's a load of bullshit. There, a trust at the end of the day is just a document documenting something. To think that the UN turn up with their guns and tell you to get out of your property, that you can wave this piece of paper around going, oh no, but it's in a trust. No.
Of course, because ultimately, whether it's held in private hands or within trust, the government can still come in and compulsorily acquire.
Absolutely. So the trust that I'm looking at doing, and this is where people hear me and Mary Jane say that we agree with you about the government's illegitimate and all of that.
Yeah.
But at the same time, so I was in the tax department 20 years ago and in the mail room where I started, and I'd get letters that would say tax office is illegitimate, the government, and 20 years ago, and I'd be little junior going, oh my God, this is fascinating. And that letter would get ripped out of my hands, never to be seen again. And yeah, that was 25 years ago. Nothing's changed. The tax department still levy their taxes. The government still levy all their charges and control us. So Mary Jane and I, yes, we're aware of all that and we believe it. But at the same time, we try and help clients navigate the existing laws. So the trust that we set up protect against those future death taxes. They're not going to protect against all the other things that might come at us.
Yeah, it's like, okay, we're going to play in the government sandpit, even though it's an invalid sandpit as such.
Exactly.
Well, because the point is, if you don't, you lose. So you might as well do what you can within that system to protect it. But look, if we have tanks rolling down and they're coming door to door, because at the moment they don't have that ability to go door to door. They just don't have the capacity. But if tanks and robots come in, we've got a whole lot more problems than...
Yeah, so looking at that, and I have some mates that invest in other countries. I mean, in other countries, are there any more secure ownership over assets, or in particular land and property that you're aware of?
I'm not an expert in any other country.
Yeah.
I've done a cursory look, and I think it's pretty much, I mean, no, they say Costa Rica and this, that, and the other, but if you're living there and you can understand it, sure. But if you think, oh, I'm going to invest in there but stay in Australia, it's actually further away. You have even less control over it.
Yeah, and then I've looked at Bali, and then as Mary Jane pointed out, Bali's an extremely communistic country, and yes, okay, their government isn't so controlling, but the government also have their cartels with guns. And same with Mexico and Guatemala and all these other places. You think, oh, they've got much more freedom, but yeah, they've got big gangs that'll just kill you instead. We're caught between a rock and a hard place with everything that we look at.
Maybe over the ice wall, maybe beyond the ice wall. There might be.
Maybe.
All right, we don't have a lot of time left, and we've got quite a few questions. So, Rob, if you do have questions, then maybe after we've answered some of the other ones, you can come back.
No worries, thank you.
Cool. So Kat's asking, what is the tax situation for undistributed income in the Family Protection Trust? Is it even relevant or still managed under personal income tax?
Yeah, so the Family Protection Trust will operate just like a normal trust if you've got a rental property in there. So a lot of people I'm working with at the moment, we're just transferring the family home to the Protective Trust. So if it's just the family home, there'll be no income to worry about. But if you do run income producing assets in the Family Protection Trust, which you can, absolutely, it will just get distributed like a normal trust. The income will have to go to somebody if you want it taxed at good rates. If not, it will be taxed at the penalty rates which apply to trusts, which I think is the top marginal rate, 45%.
Yeah, so let's just dumb it down for people like myself. So that means distribute it. So if you've got young adult children or people with lower incomes, you can, on paper, distribute it to them. And if you don't, I hear there's this thing called a bucket company.
Yeah.
So it goes into a bucket. So because you don't want to be paying 47% on the top marginal rate. So, but that's a sort of an advanced strategy. And if you've got that much money hanging around, then good luck to you. And if you do, then have a chat to Cass.
A bucket company is just very simply a company you set up that just ends up the bucket for everything else, so that it can be taxed at the company rate of 25%. And then that bucket company can end up investing, buying property, buying gold, doing whatever it wants to do. But yeah, that's the sort of work I have been doing my whole career. So people can book in with me to chat about those advanced strategies.
So the next question is that all right, Cass? The next one?
Yeah.
If an SMS can have more than one person, would you include your adult children? I have. Cass did.
I did, and then I sacked them. Depends on your children. So mine got to the point where one of them, the eldest, would just refuse to sign anything. I'd be like, mate, it's DocuSign. Push a few buttons on your phone, mate. I don't know how to do that. So, and then my second oldest, he's a bit of a smart ass. He was questioning every, like I had a huge balance. He had a tiny balance, but he'd question every single decision I made. I'm like, no, mate, I'm just going to get rid of you. Interestingly, he wants to come back in. So, so it's up to you and your kids. If your kids are difficult, hard to communicate with, annoying, I wouldn't waste the time because they're only going to have such a small balance. Mary Jane, on the other hand, has a different experience. All her kids are in and she's loving it. So,
well, and look, who knows what will happen. My older son is a bit like yours. He's asking lots of questions and he's got less than 1% value. But anyway, as long as you can put up with their questions, and at the moment I have found that it's a useful experience for them to see that super, which is over there in digit lands in big super, and then no one pays attention to it. Actually, look at this. That is your super. This is fake, by the way. And I showed them to them right at the beginning, and I said, look, this is, your employer has to pay 12%. And it goes and sits somewhere, or you can hold it in your hand. And they kind of went, ooh, that's interesting. And that was quite a few years ago now. So then they all got a little bit interested in the shiny stuff. And they actually came to me and said, oh, look, I've got a little bit of savings. What can I do? So they've set up accounts with Ainsley Bullion. One's got the new saver account, one put it in unallocated, and they are so happy. And they don't know all the nitty gritty, but they get the general concept. So I found that quite rewarding. But again, it depends on the kids and how much you can put up with their questions. So
yep. Christian.
I've got an SMSF and I've sold a property and wished I had invested in gold. And you and me the same. My concern now is the government's ability to call on the gold at a reduced rate, as had previously done at war times.
Yep.
Okay.
Yeah, I'll answer that one because I love this one. The government has only called upon gold once in history, and that was in the US. And what people don't know about that is the government asked people to bring their gold in, asked them to. Those compliant people went running and said, yes, Mr. Government, here's my gold. All the farmers out the west with the guns went, no, not doing that. That's the only time it's ever happened. And the government did actually pay the people for the gold. Yes, it was undervalued, but so I don't believe the government would do this or have the ability. It would be a huge thing for them to do. And then even if they did, this is why a lot of our clients store it at home or buried somewhere out of everybody's knowledge of where it actually is. Because how are they going to get it? They certainly would not have the ability to go door to door with a metal detector and try and find out where your gold and silver is. So, yeah, that's why. And then the other question is, well, if it's not gold and silver, what are you going to invest in? If it's property and they can take it back. If it's a bank account, they can freeze it. If it's the share market, they can freeze it. What are you going to put your money in? If it's crypto, they can crash the internet. So gold and silver, the physical stuff, even if there is that minor risk there of them trying to recall it, it's still the safest thing that you can just tell them to go jump off a high cliff. Can I place a registered company that is not currently producing income into your SMSF? You'd probably need to talk to us a little bit more about that. There are very, very big restrictions around a SMSF investing in a related party. So I'd want to know more about why you want to do that and whether it's worth all the complications you'd put yourself under to do that.
So Kat's asked, what is the definition of leaving a job? What evidence is required? Kat.
It's something like an email to your employer saying that you request.
Stop laughing, Kat.
Yeah, so if you're self-employed, it's basically just wrap up the business for a couple of weeks or something. An email to your employer saying that you retire, not taking the wage anymore for a period of time, things like that. And as I said, I've been in SMSFs for 25 years, and this is one area that I have never ever had the tax office ask a question on, prove it, because I mean, you're only accessing your money. So yeah, it's not an issue that they really.
Because I recently turned 60 and have just recently emailed Cass and the other managing director that I am retiring. So Cass is laughing about that, but I am actually retiring. I'm going the end of the year, but as a director, I'll still be overseeing operations, but I won't be working in the company. So
drawing a wage.
Absolutely laughing, and I won't be on a wage. She was absolutely laughing because she had a heart attack last night. But look, it's basically, and I had sent her an email with the other managing director saying that this is what was happening, because I do need, but I've actually retired 2 times already. This will be the 3rd time. So I'm going to have a little break over Christmas and refresh. But I'm always, the educational side, which is we do this for nothing. All of this is going to continue. Because this is the fun part. This is not actually the working part.
Yeah, and so same with me. I'm technically retired. We just, we do this because we love the interaction and dealing with people and educating, and that's what retirement is. And if it is an actual paid job, like with a third-party employer, you would actually have to quit. And then it depends on your relationship with that employer. You might be able to quit and tell them, but I might come back. Or if it's not that arrangement, you might have to just quit that job and then go get another job in a few months' time.
Yeah, a lot of people, and as I said, I've retired twice already, and played golf for 3 years. And a lot of people retire, and then after a couple of years or weeks, think, okay, well, I've done that. I got that out of my system. What's next? And that's absolutely no problem at all. So Tony is over 60. So if his shares in the SMSF make a profit each year, are they taxable if you sell them?
No. So once you're over 60 and met that retirement condition.
And put into pension mode.
Yeah. So once you meet the retirement condition, you let the SMSF accountant know, hey, I'm retired. And they do what's called put you into pension mode, which sounds complicated, but it's not. It's actually just a tick in the back of the computer system and a report that they have to lodge with the tax department. Once you're in pension mode, everything is tax-free. So that's why people, if you've got gold or shares or property, and you're getting close to 60, I always say, wait till you're 60 before you sell that. Don't make a gain until you turn 60 and meet that retirement condition, because then it's all tax-free. If you do really have to sell something before 60 or before you meet the retirement condition, it's still, the capital gains in SMSF is still only at 10%. So it's still better than if it was in your own name. But yeah, wait till you're retired if possible.
And get the accountant to click the button.
Yeah.
Next one, JB. Now, JB, you've got your hand up. We'll read your question, and then if you actually have anything you want to say, you can unmute yourself. Would a death tax apply to spouses, i.e. asset in the spouse's name? When they pass away, would the death tax apply to the remaining spouse? Well, we don't know.
We don't know until they introduce the legislation. In some countries, the principal place of residence is exempt. So it wouldn't apply to that. But in answer to your question, most likely, other than the principal place of residence, because we don't know about it, any other asset passing to the spouse, yes, I believe the death tax would definitely apply. Nasty.
JB, did you have a follow-on question? You've got your hand up.
Yeah, so that leads me into, I received some inheritance before the SMS was set up. And
yeah, I can't hear, JB. Can you talk into the microphone a little bit?
Sorry, I might have, can you hear me now?
You might have to put it closer to your mouth.
Okay, I'm on my laptop, so I'll move it closer. I received some inheritance before the SMSF was set up, and we purchased metal in our own name. Well, it was actually my husband went down to do it, so it ended up in his name. And we can't. It sort of dropped off the radar for a while. And we were talking to Peter about transferring it into super, and we did one transaction. And my husband wasn't very impressed because we had to sell the gold, we had to put some money aside for tax, and we rebought the gold in super, and he lost an ounce. So he said, well, I don't want to do that again.
Yeah.
So we've still got a fair amount outside of super. So
yeah, so I know where you're coming from, and I think Mary Jane might know. We are in the process of trying to get a tax office ruling to say that you can transfer gold and silver into an SMSF without that sale. But where's that up to, Mary Jane?
Yeah, so we did ask the tax office, and the tax office said, we don't want to make a ruling, go talk to the auditor. So we have put our argument into the auditor for what's called an in specie transfer, so where you don't have to sell it, get the money, transfer the money and buy it back. We are just waiting for the auditor to reply. We don't want to hassle them too much, but you will certainly know about it when we get an answer, a good answer. If we don't get a good answer, then we won't say anything. But we are working on it. We have put an argument to them. We believe shares. You can do it for shares. So,
we used to do it with gold and silver in the accounting firm for sure. But it's the auditors that stepped in and said no. And then, people might have heard me say before that when people say no. So my auditor, SMSF auditor, said to me 15 years ago, no, you can't store gold and silver at home. And I went, oh, really? Can you please tell me where in the legislation it says that? And they're like, oh, nowhere. I'm like, well, if it doesn't say it, then I can. And that's where all this started. So for 15 years, I've stored it at home because there's nowhere that says you can't. So the same thing, there's no legislation that says you can't transfer gold and silver in specie. So we're pushing back on the order to try and say, well, look, why not? The reason you can't transfer some things is because the government tax office are worried that you might manipulate the value. So you might try and transfer it at low value or high value. So, but they allow you to do shares because that's recorded on the share market as to what the trading price is. So therefore you can do it. So same thing with gold, like, a bit windy here. Yeah, so we're arguing with the auditor and we'll let you know. Definitely let everybody know with our newsletter. Make sure you subscribe to that because when exciting things happen, we put it straight out in the newsletter.
Yeah. So yes. Now we do only have 6 minutes left, but let me just have a look down here. Someone SG just said hi and thank you for these live Q&As. In regard to asset protection, is your home protected against council or government land grabs? For example, the Southern Australian Vacant Land Bill notice of acquisition.
No.
Earlier.
Yeah, these protective trusts are specifically for tax and the land taxes. Sorry, the death taxes. All those other ones we still can't get around.
Family provision claims.
Yeah.
Don't forget that. Cats, what happens to an SMSF balances if you have a family in there and then I spend it all in my retirement and there's nothing left for them? Is that a thing they should worry about? Well, that would not be allowed to happen, would it?
You can't. You can only spend your account. So in an SMSF, even if you've got multiple members, everybody's still got their own sub account. Just like in a normal fund, in a like Host Plus, you're a member with a million other people, but everyone's got their own account. So you can only spend your own account, Kat. If your kids are in there, they're going to have their own account. If you spend, you'll be breaking the law and get penalised badly.
You'll be breaking the law and get penalised. Technically, because if there's a bank account and if you've got other members that are not necessarily active or paying attention and you say, I'm going to spend all this money and they just go, oh yeah, approve, then that could practically happen, but you will be in a lot of trouble.
Yeah.
From a if you're not sort of paying attention, if you're worried that I might do it accidentally, well, no, because you'll be talking to the accountant, you'll be in pension mode. They'll say, well, here's the amount of pension that you can be drawing down on. You set up a automatic debit for that amount. So it's not something that would happen accidentally. If you did it knowingly, then that would be criminal.
Yeah. Yeah. Rob's clarified, the trusts in common law originated in medieval England. I have an English heritage. So that's probably where my fascination of trust came from. Evolving from the need to address injustices faced by the Crusaders who entrusted their lands to others while away. Yeah, that was similar to what Mary Jane said. So I might do a little bit of research on that later, because it'd be good to know like roughly what era that was.
Grant always says 16th century. When I asked Mr. Chat the other day, it said 12th to 15th century. But it's from the Crusaders, so whenever they were around. And then throughout history, it's become formalized. So then it got into the sort of 18th, 19th century, where then it was codified, and equity law versus common law versus statute law versus other things. And then it went down, and then in modern Australia, it's evolved through time in different ways. So maybe we'll do a short standalone history of trust video that people can enjoy.
Do that after I track down my paper, and we can analyse that in a session.
Yeah.
Okay. Is there a requirement to have your SMSF Gold insured? And insomnia, who will insure it? I think that might be a typo. Okay, no, it is not a requirement, and I haven't found anyone that would insure it anyway. I did find one company that would insure it, and it was a ridiculous price. So it's all of our clients don't have it insured. Your insurance is your good safe and your good hiding place.
And I've just put in the chat a link to where you can download our gold book, which is here, and 100% discount code, which is in the chat. It is all caps SMSF Gold FFS. You put that in the coupon field when you go to check it out, and you get 100% discount, and you can download it. And that will that'll remind you what Cass just said about insurance. The requirement for an SMSF every year that your auditor will require is that you have considered insurance. The only requirement, legislatively or regulatory, is consideration. So you go, I'm considering insurance. Will I take it out? Maybe not this year. The auditor will always say, oh, well, we really think you need to consider it. It's like, yeah, I considered it.
Yep. And last question, do you put your principal place of residence in an SMSF? No, absolutely not. No, this is an absolute not. But the principal place of residence into these protective trusts that we're talking about, absolutely, if you want to protect it against that future death tax. So that's probably a good place to wind up. JB has still got a hand up, but she might have just left that up.
Big long thing, Christian McKinnon. The concept originated not as a separate area of law, but rather as a blend of. So a lot of people have been doing Mr. Chats on this by the looks of it. So if anyone else is interested in the history of trust, certainly interrogate your preferred AI. Be aware, however, AI is not always correct, which is one of the main reasons we wrote this book, because when you interrogate AI about gold in your SMSF, it will tell you cannot store it at home and you must have insurance. So, think of Mr. AI as a junior intern who sometimes gets things wrong. So always keep this switched on. Do not forget tonight, and I will put it in here, this is going to be really interesting, really great. The link, which doesn't, the link is there. Investing need to know, because we know this has come about because a lot of people, including ourselves, have fallen victim to a range of things where essentially you lose money, which is really unfortunate. Wasn't from AI, Christian, sorry.
JB did have one question. If you unmute, JB.
So my husband's concerned that if precious metal has a dramatic rise, that it could also have quite a big pullback, and he's wondering about strategies to pull some of the profits. So maybe something like converting 5% into cash, not in the bank, but into cash to live off, or things like home improvements on the residential home to help the value go up, possibly other assets, although I can't think of what would be a good other asset, especially in Victoria. What are your thoughts on that? And what are the analysts saying at the moment?
Yeah, by all means, if you've got a need to take profits, take profits. Personally, no, I'm still continuing to buy it, even at what we would say this high rate, because the history of gold and gold in particular is that in times of economic uncertainty, when the share market crashes, gold skyrockets. And where I get most of my information from is Jim Rickard's He's an advisor in the US he used to be a financial advisor for the Pentagon. So I think he sort of knows his stuff. And Robert Kiyosaki. And if you Google them on YouTube, you'll see heaps of videos on what they think about the future of gold and silver. And Jim Rickards, even though he very quickly said, don't quote me on it, said that with all the fundamentals behind gold at the moment, he could see it going above 100,000 US an ounce.
And in the chat, you can see a photograph with Cass and me with our gold book and Jim Rickards in August in Sydney.
Yes, he's a very intelligent man, and that's where he thinks, well, he said, don't quote me on it. But then he did do a more realistic, definitely 15,000 an ounce, which he's been saying for a long time. Even in his books, he says that. So people ask me, when's the best time to buy gold? And I say, whenever you've got spare money in the bank account. So.
Thank you.
All right. So
All right.
head off, and if you want to log back on tonight at 7 Canberra time, we'll see you then. And if not, we'll see you next time.